All right, back in June, I did a video on that first interest rate cut, first quarter point here. Not all that substantial, but I was saying that this is only the beginning. Canada is on the cusp of a recession here. Data doesn't look good. Jobs numbers don't look great here. And I follow a lot of economists. David Rosenberg is one of them. I've also interviewed the head of the BC Real Estate Association, their top economist here, Brendan Augmanson. So I follow all of this stuff, and I was saying that the Bank of Canada's hand will be forced to lower interest rates, probably sooner than most people anticipate. And I had a lot of haters. I've got a lot of haters on this channel saying, look, we've only had a quarter point rate cut here, 25 basis points, and this clown, this joker, typical real estate agent, is calling for the floor to fall out from interest rates. Now, I didn't exactly phrase it that way, but I did say that the rate hiking cycle is likely over, and you're going to see interest rates come down slowly but surely into 2025. And I've been saying this for over 6 months now, at least 6-7 months, especially with the mortgage renewals. Because if you guys have followed this, a lot of these fixed rate mortgages are coming up for renewal in 2025 and 26. That's top of mind for Tiff Macklem and the Bank of Canada. They don't want to see distress selling. But these same haters, they'll say, if the economy picks up, interest rates are going to be headed higher and you're going to get a real estate crash. Or if the economy slows and we head into a recession, interest rates are going to drop, but people will be unemployed. And again, we'll get a housing crash here. So these guys are looking at things through a very, very dark lens here. And these same guys were saying a while back that the US economy, it's running hot, and if they don't lower rates in the US, Canada is going to be dragged kicking and screaming, and we won't be able to cut rates either. Well, they're dead wrong on that, because the US, if you follow the economists that are experts on this, the US and Canada can diverge on interest rates. Now, they can't diverge too much because you can't have the loonie at 40 cents on the dollar. But anyways, now that theory is completely blown out of the water anyway, because the US recently had some terrible jobs and unemployment data recently, and now it looks like they're going to have to take a hacksaw to interest rates as well, which, if anything, that means Canada is going to be accelerating that path to lower interest rates. So brass tacks, the economy is weak. I think it's weaker than the data would even imply. Rates are going to be coming down. Lower interest rates will exert upward momentum in home prices, because interest rates are like gravity on asset prices. That's the facts, Jack. You might not like it, but that's what I see happening. Now, it may take some time for these interest rates to kind of work their way through the economy, but I do expect activity. Right now we're in summer, things are dead. Activity is going to likely pick up in the fall. Getting back to these haters, though, these detractors, they'll say, well, if the economy does poorly, like Jay says, that doesn't bode well for the Vancouver real estate market. Well, maybe I'm an outlier here, but I don't actually think the Vancouver real estate market is all that correlated with the economy or the stock market. We've seen this through many recessions now. We saw it through the COVID lockdown. We completely shut down the global economy and prices actually increased. Now, the reason for this, I don't really have much objective data to back this up, but this is what I see in my business. The real estate transactions that are happening, most of them, they're well capitalized, okay? They're putting 20, 30% down. Very few are going high ratio. I see an incredible amount of all cash buyers. I'm blown away by how many cash buyers there are out there. There is a ton of clear title equity. According to Bob Rennie, over $440 billion of clear title equity, no mortgage. And that's one thing I see. It's kind of the same difference. It's the difference between Main Street and Wall Street. You can have a situation where people are struggling, and yet corporate profits are surging and the stock market's ripping higher. And buyers in Vancouver are really not the ones working at a grocery store checkout or driving a cement truck. If those guys get laid off, I know I sound a bit rough here, but it's going to have minimal impact on a market like Vancouver. Vancouver is not really driven by that. It might have an impact on a market like rural Saskatchewan. But what we've seen is that Vancouver is pretty well insulated from these economic shocks. So rates are headed lower. I think the next rate cut is probably going to be in September. And most mainstream economists now, they're forecasting a full 2% rate cut by the end of 2025, which basically brings us to about the fall of 2022. Now, here's the latest, just shifting gears a bit from the Financial Post article. I just read this yesterday. The headline is, in Canada's housing market, more supply could mean less affordability. So that's a pretty good headline grabber. Oxford Economics cautions that Toronto and Vancouver, they say, are akin to New York and London, where demand can never be satisfied. And according to this report, just to keep prices in check, we would actually need to increase housing completions by roughly 70%. And I'll tell you right now, that's never going to happen. I'm a huge proponent of supply. I've said for years now, we desperately need more homes. You're not going to hammer the market into submission with regulations and taxes, but there are certain fixed costs: land, labor, building materials. Of course, municipal charges and taxes and CACs, all of those are only going to go up. And even if prices do come down, which we've seen that in the luxury high-end pre-construction market, what you see then is construction starts fall off a cliff because the pro formas don't pencil anymore. And what happens is the developer stops building. They're going to wait now for the market to catch up and demand to increase because they don't want to be stuck with a glut of inventory that they're going to have to offload at a discount. So there's a bit of a floor in pricing there. And what happens in that situation is supply tightens, and that sets the stage for the next real estate boom. We see this in every cycle. So again, I don't think you can hammer the market into submission with taxes. The NDP has tried this to no end in sight with these guys. But I agree with this report. I don't think you will ever build enough supply. A huge proponent of supply here, but you will never build enough supply in cities like Vancouver to keep up with the demand, in my opinion. But getting back to interest rates, again, interest rates are like gravity on asset prices. If we get a couple more quarter point cuts here, that is going to drive up the prices in the Vancouver real estate market. I'm Jay Coupar. Feel free to subscribe, and I'll see you in the next video.